Hey, good morning, traders and investors. Todd Gordon of Trading Analysis. Welcome to the TA live stream. It's Wednesday, December 2nd, the last month in a year that the world will certainly not forget for a long period of time. Hope you guys are doing well. Thanks for joining us. Got a good show as always. Packed content. We'll get you out of here hopefully before the closing bell, which is the game. You got to excuse me. Oh my God, my eyes are burning right now. Those of you who wear contacts, have you ever been through this? So I came down to do work last night. I've been wearing glasses a lot thanks to Warby Parker. I finally got my glasses after my daughter ripped my glasses in half. So I threw contacts in. I only wear them for an hour or two a day for do whatever. After dinner last night, my wife made dinner and I threw Tabasco sauce on the whatever we were eating last night. I came downstairs to do work, took my contacts out, took them out, put them in my contact case for overnight, and I just put them back in my eyes this morning. Apparently, there's still Tabasco on the contact lenses, and my eyes feel like they're on fire. I think it's time for LASIK. I'm about over this. Oh my God, I'm literally crying right now. So, anyways, the show must go on, right? The other thing. And this is going to be a little bit of a spoiler. So have you guys been watching the Undoing? Let me just tell you, I don't want to spoil anything, okay? And a couple people almost spoiled it for me for not mentioning it on social. So turn your speakers off for the next 30 seconds, okay? Ready? Go. This is the HBO show Undoing. I totally don't get it. If you guys tell me if you watched it, where did all this guy's money go? He's like a top oncologist in New York City, and this is a very popular series. If you guys don't know what the hell I'm talking about, his money was gone. He's a top oncologist. She's a major psychologist, and this girl just kind of took his whole life. But like, where did his money go? You know, he had to borrow money for public defense, like the whole thing. I don't know. I don't get it. I didn't like it. Tell me what you guys thought about it, but okay, done. So, all right. So listen, market's making new highs. NASDAQ continues to go. We're going to see an interesting rotation from Terry. We're going to see technology and communications and discretionary kind of coming back into play. And that's kind of where I wanted to start on the opening monologue here as I'm continuing to cry from Tabasco. I think that's probably a mild form of torture in some countries. But I just want to, let me make sure I'm the presenter here. Oh, yeah. Let's see. Me make presenter. I believe I'm now taking the screen, Bennett, and I will take the monitor here, and we'll get started with some actual relevant, hopefully interesting information. Again, guys, thanks for joining us. Throw a thumbs up down there on the YouTube window if you don't mind. Help the Google algorithm know you guys are enjoying the information. So to start, there's a lot of nice market movement. I saw an interesting statistic, and I've got to quote him. I'll tweet him. I'll retweet him after. I was reading this morning. In history, I think there's 13 occurrences where if the market's up between 10 and 15% for the year, December finishes positive 100% of the time. It was not my buddy Ryan Dietrich who would usually come up with that kind of statistic. I'll find him and I'll retweet him. Really interesting. And, that's the way the market's trading. We talked about it last week that, I was kind of mixing it up. I wrote an article citing Dave Portnoy and kind of picking on the people who are sort of just investing and just long-term money managers who collect a fee. Again, the conversations just continue to come down to me. I got off the phone with a really good friend of mine, really successful guy. From high school who's going to invest in the new money management company. I've just had this conversation so many times, just setting up for the new wealth management is, successful guys in their 30s, 40s, 50s, and even their 60s have just underparticipated in this massive move up in the market. And, that's my job, hopefully, just to delineate and create that Chinese wall between the short-term noise and the trading business that we're in here, which is important. And we try as hard as we can to generate alpha, which is return above the benchmarks for our paying customers. But make sure your money is set. Make sure you're properly invested, because I truly believe we're in a strong bull market right now. I believe that you do not want to miss this. If it goes lower and you're 65 and below and you're still working, good, buy more. So just be sure to make, in a good position here to take advantage of what I think is a massive bull market. I was on CNBC yesterday with my buddy Mark Tepper, who him and I were debating Virgin Galactic space and like astronomical valuations. I want to talk about that quickly. Tesla's added to the S&P now. They're going to do it all in one chunk. So if you think about it, everybody in America who owns an index fund or mutual fund is buying Tesla at the highs. We'll see how that turns out. Okay, so let's get in here. And one interesting, I think one interesting sort of market rotation that's happening here is it's not just U.S. tech. We are seeing rotation in other U.S. sectors, but it's also international markets that are moving. And I think this is a really, really good thing here. So let's take a look at this. This is the S&P in black, and this is the EEM, Emerging Markets ETF, which is roughly 50% Asia. There's a lot of South Korea. There's some Japan, and there's a lot of, I don't know what percent China there is. EEM ETF breakdown. But what I wanted to show you is the EEM is on the verge of a breakout, which we've seen this game before over the last 20 years. And in fact, the EEM is not taking out the pre-credit crisis highs. Okay, so 2007 EEM here in the left scale at about 55 has not been taken out, right? So here's the EEM breakdown. This is the iShares MSCI Emerging Markets ETF. So roughly 7% BABA, Tencent, Taiwan Semiconductor, Samsung. It just goes on. So certainly a broad base, a lot of Asian exposure there. And what's interesting is as I make my point in this chart, generally Asian equities have a pretty good correlation to our technology markets via the production of semiconductors in South Korea and obviously in China as well. That relationship is broken apart a little bit as tech has moved so much in the stay-at-home, work-at-home environment that we have here. And I'm wondering if it's starting to catch up. So EEM now, if you take a look at EEM over the S&P, and I've paired this up with a rotation of EEM compared to the S&P, which is the benchmark. Watch what's happened here. So 2007, and I'll squeeze this up a little bit. EEM is over here in the leading weakening quadrant. Anything right of center means relative strength. So what happens is, okay, so we broke away. There's a credit crisis. EEM rotates, goes down into the lagging, which is down here into the left. And then look what happens again as we try to break out. EEM fails up here in 2011. EEM very quickly drops from leading down into lagging. Okay, so we'll go through it again. There's 2014 and 15. EEM is firmly over here to the left. Also, I forgot to mention, this guy is the MSCI All World ex-US ETF. Okay, so not just emerging, but all world ex-US. And then the same game again. Look, EEM makes a strong move over here to the right as we try to break out here in 2018. Then we go into the consolidation, and look what's happening now. EEM is on the verge of breaking out, but unlike every other prior attempt, we're not in the leading quadrant. EEM, leading quadrant. Trying to break out here, leading quadrant. Trying to break out here, leading quadrant. But here we go again, and we are so far away from the leading quadrant. We're still heading in the right direction, but we need to see some serious rotation. It's been nice. We've seen some international markets break out, but we've seen this game before over the last 12 years or so, and emerging markets was not in this quadrant. So what that means going forward, I don't know. Well, we shall see. So in terms of my portfolio, I really do, I haven't rotated much. I haven't done much. A lot of it is tax reasons to get the long-term capital gains. I do want to sort of reallocate. I'm pretty heavy technology, consumer discretionary, and Qs. What I did was took a Excel spreadsheet of the one cash account that I'm trading that is susceptible to a lot of short-term gains if I can get through this year. So here's just a spreadsheet of this one cash account that I'm holding. My biggest position, XLK, $100,000, Q's 90,000, Apple 49,000, Netflix, AMD, so on and so forth. And what I wanted to do was just show you on the RRG my actual portfolio. And the benchmark here at the intersection of XY axis is the S&P. And, you know, as we're kind of rotating here, here's 2019, a lot of mismatch here, not really much going on with these portfolio holdings that I have. But then all of a sudden, 2020, watch how they jump sort of the next orbit. They just rip out and to the right. And I'm really interested to see what Terry says here on the rotation, but a lot of the big holdings, Tesla, DocuSign, Shopify, AMD, Apple, Peloton, Penn Gaming, Take-Two, Match, Apple, they all seem to be rotating lower. All right, so is there a rotation out? I don't know. They could easily start to head back up. But as I'm building the portfolio for the money management business, guys, I'm doing a lot of Excel spreadsheet work, a lot of charting, a lot of look at valuations. And I think the game, guys, going forward, as I'm getting ready to launch the money management business in 2021, is there's going to be exposure, not just in tech, discretionary, and communications, but there are strong stocks in all sectors. And I think that's what a lot of guys at money management businesses are missing, is there is rotation outside of just this group that we've ridden so hard for the last year or two. There's pockets of strength through multiple sectors. And if we can get the rest of the world to participate in emerging markets to break higher, that's going to create much more of a stock pickers market in here. And I think it's going to make things a lot more interesting. So very bullish this market. Make sure you have proper allocation. Trade with a small percent of your capital with us at Trading Analysis. And let's bring in the team on that note. Good morning, TA team. How are you guys doing?
Morning, Todd.
Good morning, Todd.
Morning,
Alex,
Todd. What's happening?
Terry, Bennett, talk about the best trading team on the internet. Give a thumbs up to this amazing trading team. These guys have been kind of slaying it. I've been working behind the scenes. These guys have been trading well. Knock on wood. I can say that. You guys can't say that. The minute you say that, the trading gods will slap you down, right? But you guys have been trading well. We just did the Motive Wave Black Friday sale. A lot of interest there on that Motive Wave, Elliott Wave software that we use. And what else is going on in the world, boys?
Not a whole lot. That was actually a whole lot of fun having the founder and creator of Motive Wave join us for that webinar. So hopefully those of you tuning in this morning were able to check that out. It was a lot of fun.
Yeah, that was awesome. That was awesome for sure. Alex, what's going on with you, man?
Yeah, was looking this Bitcoin over weekend. We nailed these highs, but eventually it was a flat. We have a little bit return on the upside, but I think the upside is still holding our levels. Actually, over the weekend on Sunday, we got the big news about this Guggenheim macro fund. Actually, they want to allocate 5.3 billion in a grayscale Bitcoin fund. 10% of allocation of their all funds. So the narrative continues to be strengthening. So I'm looking at that space, and it starts to stir up really nicely.
Yeah, that GBTC, that's got to find a better correlation to Bitcoin for, I think, for a lot of people, institutions to embrace it. But I haven't overlaid it. I have to take a look there. But yeah, good call, Alex, on being rejected from 20,000. Waiting for you to direct us into the next, the next step. And yeah, so let's leave it there. Let's get into the charts with Ben. We're going to go to the hard right edge here. Bennett Tyndall has been running the charts for us. I rely on his chart work to guide us through every twist and turn of the indexes and the major stocks we're trading. So Bennett Tyndall here in 1 second.
Good morning once again, YouTube. Thank you all for joining us. Hope you guys had a fantastic holiday break. As mentioned, I think last week we were talking about the fact that the markets were closed Thursday. Friday, typically after Thanksgiving, you see a relatively light trading session. We actually opened and closed, I think, 30 cents from the open to the close in the S&P. So it was a relatively quiet session. We've seen some more interesting developments as we go into the start of the week here. And I can't believe we're just, gosh, 23 days or so from Christmas. We've also got the new year just around the corner. What can 2021 offer that 2020 hasn't already challenged us with? So speaking of Motive Wave, we had a fantastic time this past weekend working the Motive Wave webinar with Tony Lindsay, the creator and founder of Motive Wave. So let's dive into it. We're going to take a look at the S&P. And what I want to focus in on today is kind of the price action that we've seen off of the October 30th low. And what's really rather interesting is we referenced this a few weeks back. The fact that we've got the expanding kind of volatility pattern here on the weekly and the trend line that is sourced off of those levels still being respected and acting as resistance. Now, with yesterday's kind of risk on tape that we saw, I do think we are gearing up for a move which should take us out of this consolidation effort, which really has been in effect since January of 2018, kind of an expanding volatility pattern, lower lows, higher highs. So I do think we resolve out of this. However, given the kind of sideways nature of the move that we've seen here as of recent, I'm approaching it with some caution and just aware of the fact that we could see a secondary decline to kind of take us back into the corrective channel down to 3,500 area. So let's dive into it. Let me go ahead and drop a circle onto the chart here, as it does help you guys kind of determine where we are going from the weekly and down to the daily time frame. So on the weekly, we're going to focus in on price action from September 2nd on. You can see there it is on the daily chart. I'm still looking at this as a post fourth wave move. And off the daily, we're going to get down to a 20-minute chart and just kind of talk about this overall pattern. You can see the white circle coming into play there. Now, going off the October 30th lows, we've talked about this impulsive rally that we had. And since the rally came to completion on November 9th on the Pfizer news, we've really been kind of sideways with some overlapping corrections, which is a little bit concerning and does open up the idea that this is some sort of a motive diagonal wave, which could potentially give us that secondary move lower back down towards 3,500, 3,467. Here in the S&P. So I don't want to discount the possibility that we do see some sort of a continued correction prior to resolving out of this overall trend. So back to the 20-minute, and let me go ahead and bring over just a quick image here. Oftentimes when you are dealing with a bit of a challenging wave structure and you're presented with multiple valid interpretations, you can sometimes utilize other traditional indicators along with your price action and your wave count. And then you can also just kind of use the general direction of the trend. If you think of it almost as dials on a clock and price action pointing relatively at a particular point on the clock, and let me bring this image over, you can see, directional moves, motive impulsive moves typically fall somewhere within what would be the black lines on this image, and price action that kind of falls more in the yellow category, whether ascending or descending, is often counter trend and corrective. So with that in mind, just kind of being aware of the fact that it is kind of been a meandering sideways move with corrective pullbacks leads me to the idea that perhaps this initial move is some sort of fake out and we do get a secondary pullback lower there into support. So overall, I remain constructive and bullish on the markets. So in the meantime, what we're going to do is we're going to focus in on some individual equity names that are presenting some higher conviction trade opportunities. So let's get to that. I've got a few charts for you this morning. The first one is, of course, Apple. And we talked about Apple last week. Apple's starting to gain some traction. We've seen an excellent initial move so far. And we discussed the implications of whether this is a post-fourth wave triangle of the minor degree or a post-triangle breakout of the higher intermediate degree. And if this is, in fact, a post-triangle breakout of the higher intermediate degree, it actually has more significant and higher price implications. But it also opens up the possibility that we do see one final kind of retest of this downtrend consolidation channel. I tend to favor the idea that the triangle is complete, but if in fact we do see a move kind of back down to the 112 area, I think that would be a fantastic opportunity if in fact you don't have exposure in Apple to at least consider it. So back to the idea that we've already completed this triangle. Let's get off the daily chart. down to the 20-minute. So last week we were looking at this zone of support, and you have a beautiful zone of support offered for multiple degrees of trend, around $112 a share. That completed kind of C of an overall three-wave structure, which is a requirement of a Elliott wave triangle. Essentially, you have contracting price action, higher lows, lower highs, and you have three-wave subdivisions within your triangle, typically speaking. So if, in fact, the triangle completion has run its course and we're now moving out of this consolidation effort, we should see a move through 125.39. 125.39 is simply the October 13th high. So when we get through that 125.39, get a close, daily close over that level, I do think Apple will be rotating back into favor, and we have implications through the 138 area highs back on September 2nd. So I really like Apple. This is actually one I just added back to my swing portfolio as of recent. Fantastic, very healthy consolidation overall. Tesla, that's another name that we've been watching, and as mentioned by Todd out of the open, will be added to the consumer discretionary sector within the S&P 500 starting December 21st. Very excited to see how this impacts the overall price structure here in the charts. Off the daily chart, let's focus in on the post-triangle move, and we had a lot of fun trading this one with our members. Todd actually had a trade on CNBC's Trading Nation on Tesla. I think they had just shy of a double or right around a double there. Fantastic opportunity to take advantage of this multi-month consolidation effort coming to completion and resolving higher. So we're looking at this in a couple of different ways. So far, this looks more sideways and consolidation in nature off of the 607 area highs. So watching downside support to yield a move through the 600 handle once again. Alternatively, if you do see this resolve lower, look for your standard wave 2 corrective pullback retracement levels to offer some support, because I don't think this particular name is done just yet. We have met the initial target, our initial price objective, or just 5 points shy. The initial price objective was $612 a share, and what that represents is a post-triangle breakout, which is equal to the widest part of the triangle, which we often see as an initial target. So you can see with our fib tool here, we measured the move from the highs into the A-wave lows. That's the largest percent move, projected it from the E-wave completion, and we've already seen that initial target. So keep your eyes on Tesla. I do like that one. Very excited to see where it takes us. The next name that I have for you, and the final stock that we're going to take a look at today, is that of Netflix. We're going to go back to the weekly chart really quickly here on Netflix and just point out the fact that we're essentially consolidating kind of mid-trend channel on the weekly. So on the higher degree time frames, I do think this supports continuation. You'll notice off of the September 2019 low, which was the completion of a wave 4 position, we moved up in 1, down in 2. Wave 2 was a beautiful 61.8% retracement. Gotta love the color coordinated fibs within the trading analysis version of Motive Wave here. And from the wave 2 low, which was the March pullback, we completed a 5-wave rally, albeit a little bit ugly of a rally in terms of a 5-wave impulse that meets the right look. But it did conclude just shy of our 1.618 or 161.8% of wave 1. So that's a very common third wave stopping ground. We've now been in consolidation from July of 2020 through November 10th of 20. And what's really rather interesting here is we have a sideways complex correction. You've got a series of 3-wave moves, 3 waves down in W, 3 waves back in X. And oftentimes when you see this kind of symmetrical looking sideways correction, you'll end up with a Y wave that demonstrates equality to wave W of the same degree, which let's take a look at where that came into play. That came into play at 464.21. The low was 463.41, and we've rallied all the way back through to 500. So this is another one we've got our eyes on, looking for an initial 5-wave move up, a little 3-wave pullback, and keep your eyes on Netflix, because I do think this could also rotate back into favor and continue higher in that upside 5th wave move. So that's it for me. Back over to you, Todd. Thank you, guys.
Really good work there, Betty. Yeah, a lot of these triangle consolidations are finally breaking, and it's just not hard to see, guys. If you have context that Elliott Wave is giving you, like the Netflix and the Tesla, like it's just easy. It's like the whole NASDAQ rally from 2018-19 where everyone was bearish and trying to tell us the market was overvalued. We're like, dude, it's just a triangle. It's just a correction, and it moved higher. So thanks for that mention, Bennett, on Tesla. I actually did it twice. I bought the see, I do this show, Trading Nation on CNBC. It's sponsored by Charles Schwab, and actually I trade a little, $20,000 account. So I actually trade live on CNBC. So I don't know. I think I might be the only guy who actually trades live on CNBC. They're just ones and two lots just to show execution. No big deal. But yeah, coming out of that triangle in Tesla, it was like 450, whatever. I bought or 425, bought the 450, 500 call spread, sold that out. Just bought the 550, 600 call spread, took profits on that yesterday. It's just riding momentum. We're going to talk about it a little bit later in the show, but good stuff. Other side of the break, we've got Terry with Sector Focus. I call him Terry Long, the spin doctor, sector spin. We're trying to hone in on his marketing image, but regardless, he does great work. So we'll be back on the other side of the commercial. See you guys.
Hi, I'm Todd Gordon, and I can't believe it. It's been 8 years since I launched this business, and what a ride it's been. Welcome to TradingAnalysis.com. We're one of the leading education, analysis, and trading alert companies on the internet. We are a team of devoted professionals who trade our capital in a live, transparent manner to show you what the life of a trader is actually like. Keep in mind, this is an industry filled with smoke and mirrors, with cheap sales and marketing tricks, so it's been my mission to run an above-board, transparent, and brutally honest operation to serve our clients in the best way we know how to prepare them for life in the markets. Every single day, we offer video and written analysis for the major trading markets, including stocks, stock options, cryptocurrencies, and Forex markets. We offer live and clear-cut and actionable trade alerts in these markets, and they're sent straight to your cell phone and posted in the members area on Trading Analysis. Once the trade is out, we certainly don't leave you hanging. We follow up on every trade, whether it's a winner or loser, and we'll conduct post-trade forensic to show you what went right, what went wrong, so you learn. And very soon, I'm going to be sharing my real-life seven-figure portfolio with our members who prefer the longer-term investment timeframes with some medium-term trading and option strategies mixed in as well. So head on over to TradingAnalysis.com after this show is over. Take a trial today and join us in our community. Let's get back to the show.
Hello, traders. I'm Terry Long here with your Sector Focus. Let's jump right in it and take a quick look at last week's price performance here. So last week was a shortened trading week, with the markets closed for Thanksgiving. Nevertheless, we did see the indexes continue to climb here, and the NASDAQ actually accelerated at a quicker pace than the S&P last week, right? So S&P here had already broken through, made a new all-time high. Look what's happened today here. Let me pop this little line. There you go. We have just now broken through and made a new all-time high in the NASDAQ. I think that's interesting. Now, last week, energy and financial sectors were the two leading sectors. Discretionary materials, communication, industrials outpaced S&P, with technology catching up, but only slightly behind the S&P. All right, let's flip over and take a look at what happened this week. This is Monday and Tuesday's price action. Now, energy actually took a big hit, down 5.5%, but then it rebounded about 1% on Tuesday, but still it's down 5% for the week here. But look who's back in the lead. Our technology and communications sectors, they may be reestablishing themselves as they closed higher on Monday and Tuesday, accelerating the NASDAQ here to the all-time high. So I think that's very very interesting, and we're going to take a little bit closer look here. Let's jump on over to our weekly sector rotation here, and as we look over here on the right in our table here, we've got the industrials is still the #1 sector. It still holds first place in our relative strength ranking, but industrials, materials and discretionary actually are all continuing to move a little bit lower. Might see a bit of reversal happening here on this very last tick. Monday and Tuesday materials looks like it's got a little bit of a hook there. Can't guarantee that though for the rest of the week. But in general, these guys have been lagging. But we're starting to see this hook formation here in technology, and certainly the hook is complete now in communications. Communications got a nice accelerating pattern northward here. Now the energy sector's rebound is seen here in the hook. The hook there was complete, and this huge acceleration in momentum. But as we've seen already just this week, we've seen a big drop now. So if this pattern does continue, we should continue to see some short-term gains in many energy stocks. But again, relative strength is far from optimal here in energy, and I think we want to be careful with that. Similarly in utilities, we saw that rapid rise in momentum, only to see it peak over before it jumped down into the leading quadrant. It has now rolled down, and utilities is losing its momentum. Similarly here, you got staples and real estate. They also rolled over, right? So really, of all the defensive sectors, the only one that was got any kind of interest to me is this financials here. So the financials continues with a steadily increasing relative strength ratio, and now also an increasing momentum. So it's now started to move at a northeasterly heading here. So, yeah, inside this improving quadrant, not real keen. Healthcare tried to move up. It looks like it's also reversed here. So this week's sector focus. A couple of weeks ago, I covered a couple of sub-industry groups in financials, and I'm gonna take another snapshot of two more. But first, let's take a look at the top 20 market cap stocks in financials. And in here, you can see Charles Schwab and BlackRock, that they continue to gain strength, leading position. And U.S. Bancorp, I pulled that one out there. U.S. Bancorp is actually now crossed over here into the leading quadrant. And you got a nice little group here of stocks, AIG, PNC, even Chubb here, JP Morgan. They're all moving aggressively across this border from the improving quadrant into the leading quadrant right now. And even down here, Morgan Stanley had moved down into the weakening quadrant, right? And there, if you look right, center your focus right here, you'll see the hook that formed in Morgan Stanley around the 30th of October. And now Morgan Stanley has returned itself right back up here into the leading quadrant. So yeah, so a couple of weeks back, I covered asset managers and the banks group. Now I'm going to take a look at investment services real quick. So this is where you'll find Charles Schwab, Morgan Stanley, Goldman Sachs, etc., other investment management firms. Now, in this weekly rotation, you can see there's several company names that are already well advanced here into the leading quadrant. But there are also quite a few over here in the lagging and improving quadrants, right? So overall, the group as a whole is not leading. So you got to be real selective here. Now, what I want you to do is draw your attention to those that have very strong arrows pointing to the right and northeast here. We've got Raymond James, we've got Victory Capital. I like to look at that. There's that Morgan Stanley coming up here. So there's several names that are bridging across here. A couple of smaller cap plays here, right? But these guys are accelerating. They're pushing themselves into a new leadership position. I think for this second batch of leaders, I like Raymond James, Morgan Stanley, and Victory Capital. So we want to keep a close look on that. The second group I want to bring your attention to, this is the group of full line insurance plays. And what I've highlighted here are the ones that are all moving northeast. There's a couple of others here in the list, but they don't really excite me as much as what I'm seeing here with AIG, American National Group, Hartford Financial Group, even CNA, and certainly here is Athena Holding, and Athena looks like it's come similarly like Morgan Stanley. It's come up out of this weakening quadrant, returning back into leadership position. So taking a deeper dive, you drill down into, you start with the sectors that are gaining you interest, you drill into the sector, and then you drill down into the subgroups, and this is how you find good quality stocks to add to your portfolio. So as the XLF continues to move towards that leading quadrant, please add these stocks to your watch list. I think they could become our next market leaders. Back to you, Todd.
Great work, Terry. Guys, in the live show and watching the recorded version, type in and let us know what you're primarily trading. Are you mostly trading stocks? Are you short term, or maybe you're trading options, or are you also holding a longer term portfolio? Like, let us know on the stock side. Let us know on the crypto side. Let us know how you kind of break up your trading. We're gonna hit the next commercial break here. On the other side, we're gonna bring the. I'm trying to brand him the Crypt Keeper. Remember that old HBO show, The Crypt Keeper? The guy who would tell the scary tales. Alex doesn't like it, but we'll decide on that. Other side will be Alex with macro and Bitcoin.
Hi, if you don't know me, I'm Todd Gordon. I worked in the trading markets as a profession and a passion immediately following college 19 years ago. As I've grown older, my trading and investment style has changed. As I've grown as a trader, my holding period for my investments was also growing longer. I was learning firsthand that being properly allocated in the right stocks and sectors on a longer term time frame with proper hedges in place and the idea of compounded returns are the keys to building real long-term wealth for most of the investing community. You can short-term and swing trade the stock and options market if you like, but do so with a very small percent of your capital. And by no means should you be trading with a majority of your investable assets or your portfolio. For our clients at Trading Analysis, we recommend that you don't trade with any more than 20% of your portfolio in the strategies for our members at TradingAnalysis.com. The rest should be managed by a professional financial planner. So last year I ventured out to make a final evolution of my career in the markets. I left the very capable team at Trading Analysis that I built to run the day-to-day operations. I set out to build a wealth management business leveraging our reputation from CNBC and our years in the financial markets. We'll be launching soon, so please keep an eye out for details. If you'd like to be updated as information becomes available, please visit www.tradinganalysis.com/investments. Again, thanks very much for your interest. Look forward to what the future holds. Cheers, and let's get back to the live stream.
Hey members, hello. Alex is here with macro update, traders and members. I think all of you are there and watching. So let's start with the oil as our usual macro recap. We are holding now this nice fib cluster here. So I'm looking for a small pullback. My X wave didn't hold for the last 2 weeks. Todd was actually warning me that this gap was pretty significant on the upside, and he was right. So we had that upside, and now this fib zone is holding well. So I'm looking for a rather decent pullback. I mean, in relative terms to this $40, and then as long as this nice fib zone is holding, so potentially we might turn here and look for a more upside. I want to see what the oil is going to do on this 40 price mark. So let's go over to the dollar index, which has break our last support levels. So we have one more. This is 127, so standard support level for a possible flat. I also saw a small breakup on euro. Don't forget, ECB is on the 10th of December, and Madame Lagarde actually announced a very big stimulus bazooka. We will see what they're going to do on that meeting. Are they going to expand a current toolbox, or they're going to add some new tools? or a new expanded current measures to boost economy and provide additional liquidity. So I'm still kind of a juggling here with these levels. Anyhow, if we break these levels around 91 on dollar index, I don't think there is much left on the downside. Using the Elliott wave 5 wave pattern, we can see from March highs down in 1, up into a very nice subdivision in a wave 3, up in 4, and this might end in some type or shape as an ending diagonal or a little bit more directional to the downside. But I think key levels will be between 89 and 89.50. So if we progress to our Euro-dollar chart, same situation. We had a small break on the upside. I think I warned for a possibility on the last week free live show, but still 127. It's very well held for now. Over the 120 levels, ECB is going to watch this euro like hawks, because I never saw in ECB minutes euro dollar rate was mentioned a couple of weeks ago. I think on a ECB minutes it was mentioned like 20 times. During the Draghi era, that was never the case. So I think ECB is looking these levels, and I think this break is just on account of equal move up in stocks, in a sense that euro is usually a risk-on currency, has this tilt. So we have seen move up in pound and euro and Aussie a little bit on the upside, but I still think this will be kept around this area. If we break these levels, I don't think we have much upside left before some larger correction starts. Also, I'm looking here a New Zealand dollar, very interesting Elliott wave pattern. So if we look on a daily here, after a nice lows, let me just spread this a little bit. Very nice 1, 2, up in 3, triangulation in 4. So I consider this to be a fifth wave. I'm looking for this zone or a little bit higher, and I expect a pullback on these commodity currencies, as well as on Aussie dollar. Aussie is holding these levels very nicely, and I see pound is reversing from this level, so I'm waiting a full 5-wave move down to this potential last four wave lows, and a pullback. I'm looking to put a short trade on pound, because I think 134 is really unsustainable in this moment for a UK or British economy, and also central bank is discussing some form of negative rates or even some harder measures. So on the FX front, I expect a little bit more volatility in December, January, February to come. So let's go to a famous Bitcoin chart. Actually, from this post-triangle thrust that we had here in this small wave E, and this is a Todd's triangle that we are tracking as one of our wave counts. I saw last time a very nice levels here. We dropped, but actually it was a very nice disguised flat. We dropped from almost 19,500 to 16,000. And then from there, we have a small move on the upside. Nevertheless, I will not consider this to be a beginning of a new uptrend here. I'm looking for these two levels. When you have this type of an extended third wave, I think 38%, 5, 1 plus 3 for the fifth wave is going to be hold. So on a smaller time frame, I'm looking this as a nice fourth wave triangle. One more push on the upside with these support levels hold. I think Bitcoin rolls over again. So back to you, Todd.
Mighty bold call, sir. Mighty bold. But no, Alex has been very spot on in the crypto side, and a lot of adaptation from large institutional players. Crazy times that we live in here. So just markets open. Just taking a look at sort of the price action. A little bit of a pullback here. NASDAQ down 0.5%, Dow's down 0.6%. Just looking at the sectors, consumer discretionary down 0.5%. Actually, consumer discretionary is the downside leader here in the open. Let's just see what's sort of moving that when you're prepping for these shows. Ben, I'll take the screen real quick here, and then we'll bring in the team and shut it down here. XLY leading on the downside today. Hasbro, Genuine Parts, Norwegian Cruise, Carnival Cruise, GM, Gap, Royal Caribbean. Well, we kind of see what's going on there. You know, sort of the travel, consumer discretionary, leisure, hotels, kind of selling off here today, but I don't see too much that's going on here. Oh, I'm gonna make myself presenter. That's fine. Yeah, so let's bring in the team here and kind of wrap it up. And again, thumbs up if you don't mind. The team puts a lot of work in. You know, this is our one kind of free reach out that we do per week. So everything from doing the Elliott wave analysis at the top, sector rotation from Terry, then Alex doing the macro, and that's kind of how we approach our trading, our investing. We all trade live portfolios here at Trading Analysis, and I mean that's what you have to do. You just can't come in and say, I trade one indicator and this is a 60-minute chart, and the markets are constantly changing. You always have to adapt, whether you're swing trading, whether you're position trading. We take a very holistic approach, and I think it was W.D. Gann who said use all the tools all the time, and that's kind of the way we've built this business, and that's why I was sort of engaging with people on the chat, like how do you approach the markets? One question that I would challenge you to answer and ask yourself right in the comments below, what percent of your capital do you short-term trade? Okay, what percent are you leaving to the side? I don't care about numbers. What percent? For me, I think it's about 15% of the capital that I traded in the market is short-term option hedging, sort of let's call it crypto, in the more let's call it speculative kind of area. Futures traders, I was just going back and forth with Susie on the chat. Thanks for answering and stepping up. Everyone's a little nervous to share that kind of information, but what percent of your capital are you trading? Are you nervous of being in this market longer term? Do you think it's overvalued? Do you think we're set for a major correction? Another viewer was in there kind of pushing back saying Tesla's overvalued. Look, we did I did Virgin Galactic yesterday with Mark Tepper on Trading Nation on CNBC. Like, look, this is the kind of market here, guys, where I think the markets realize that they underpriced Jeff Bezos, guys like Jeff Bezos, and even Steve Jobs. Apple trading at a 15 PE back in like 2014 or 2013, 14, 15, whatever that low was. I think the market is trying to sniff out visionary leaders and guys who are literally going to change. The face that the way we interact and we do commerce, technology is going to become a much more significant part of our life. Alex very smartly said a lot of these different stocks and sectors are going more towards technology. And the space, Virgin Galactic, like NASA just gave them a $45 million contract. They're booking out $250,000 space rides. Who's going to pay for that? It's easy on the surface to say that's overvalued, but if you talk about the ability to increase the logistics, make transporting products smoother and more quicker, it's only, I came out with the stat yesterday, it's only 60 miles up to space, right? Can you imagine if we get the technology of a plane to send an order from, let's say, China, ship around the world, the ease of logistics, the ease of transportation is going to improve greatly, the speed. And that's what a company like this is trying to do. And then you take a company like Tesla, who's trying to blanket the lower orbital levels with global satellites to give continuous, uninterrupted satellite internet coverage to everyone around the world. Like, you can't say, well, the companies are making no money now. I think the markets are trying to award visionary CEOs massive multiples and valuations. And that's why, fundamental guys are literally banging their head against the wall and saying, oh, it's overvalued, it's going to crash. And they've missed the last 70% rally in Tesla. So take a look at SPCE. The company's going to make like $4 million this year. I think, Trading Analysis will, I won't say that, but, it's not about what the companies are making now. I mean, just watch this breakout in SPCE Virgin Galactic, $28 breakout would be pretty amazing here. This massive valuation, this kind of search for this. I believe we're in a new technology boom. I really do, with 5G coming online. Space exploration, travel, and logistics of commerce is something the market's also pricing in. Look how much street credibility Elon's getting from his SpaceX program, successfully launching. NASA's embracing private sector to help with sort of the areas they're falling short. Semiconductors have just continued to be with us and continue to power everything. So I don't know. I just say, guys, don't miss it. Make sure you're involved in this market, and if it goes down, and you're still working or you're still comfortable, just buy more. Just buy more. I don't know. What do you guys think? I know that was
I'm gonna be the first one to break it, but I just want to make a comment.
Yeah.
During this whole presentation, we never mentioned anything about the COVID crisis, right? The economy being down, where, right? I mean, look at all of these industries that are still continuing to grow, right? So, I mean, yes, the restaurant industry, the travel industry, the oil industry, all of those are hit very heavily due to that. But there's a lot of industries out there that just kept on tootling. So that's what we're focused on now.
100%.
Yeah, in my book, this is Die Hard 7 series. So I'm already counting. We are calling this highs and lows from 2018, and it was like Die Hard from 4. Now I'm Die Hard 7. So the series continues. So I'm just want to back up your observation, Todd. I think I finally said that Nasdaq will eat up S&P and Dow in the next decade. So I think with this technological transformation, and you rightly observed, this transition is now happening faster and faster. So only suddenly you realize that the shift is changing from the current functioning in banking, in transport, and everything. Just in a year, we might function in a completely different world. So it's just a quick jump, and now suddenly the Nasdaq will be the main index, not the S&P anymore.
Yeah, and you could absolutely say, it's the Industrial Revolution that happened last century. The technology revolution is happening. Maybe the wave count starts. We've talked about this at Trading Analysis. Maybe the wave count should start at the Nasdaq low in the mid 80s. Maybe this is 1 and 2, and we're inside of wave 3. The Nasdaq right now, it is from an Elliott wave point of view, it's been very challenging for us to get the count from the March lows, and you can't really know it yet. You just can't know it. The first major correction that we've seen since the March lows has been over the last month or two. Is that a wave 2? If that's a wave 2, holy bananas, is wave 3 going to be extreme side? We don't know, and it's fine to not know what it is, right? It's fine to not know what the wave count is, and that's the beauty of the Elliott wave methodology. Is like, okay, if I have context, great. I'm going to have an idea of where to risk my capital. If I don't, fine, we'll kind of step back. But I don't know. What do you guys think? Is this wave 2 from the? Is this kind of a wave 2 correction before we see wave 3 higher? Let us know in the questions below. Team, I'll leave it to you guys. Closing thoughts, and then we'll sign off.
Great show, guys.
Yeah. All right, guys, we'll leave it there. Thanks for joining us. And again, please, I hate to keep asking again. It's just the way to get the show out there. There's so much good content out there on YouTube. If you hit that little thumbs up button, you'll maybe, if you enjoy the show, it'll get out there. And that's the biggest favor you can do for us on this weekly TA live show with a great team at Trading Analysis. Thanks again for joining us, guys. And see us at TradingAnalysis.com. Obviously, we full service trading, research, analysis business. We have a wealth management business forthcoming in 2021, rooted in a lot of the methodologies that you've seen here in the show. So a lot of good stuff ahead. So thanks, and we'll see you guys next Wednesday at 8:45. Take care, guys.